Hello and welcome to the very first video of Fundamental Analysis. In this video, we'll be talking about a brief history of stock market and how it started. So without any further ado, let's start the video and let's roll the intro. We all wonder, how did the stock market start? What was the reason and how do the companies benefit from this? For this, we have to understand how did trading started. It all started in the 16th century, when European countries were colonizing and when they were looking for luxurious products, which they couldn't have had found in the European countries. So they began to import and export from their colonies or started trading. They had three options. Roadways. This was a costly option, and looking at the cost of the fuel and the conditions of the roads, can't be trusted. Railways. This was a good option, but again, not a cost efficient, as the steam engines were not invented. Waterways. This was a cheap option and a faster one as well, so they opted for the waterways. So how did the stock market start? While shipping was a good and a cheaper option, there lied risks. These were pirates and natural calamities like storm, cyclone, etc. This led to losses for the merchants. So they decided to start asking money from the investors or the public. This led to the very first stock exchange of the world, the Amsterdam Stock Exchange. This was the first stock exchange, and this very stock exchange had the most valued company to date, the East India Company. This company is said to be valued around $8 trillion. If it existed today, yes, that's the GDP of England, Germany, and India combined. Which brings me to the next and the final point. How did Indian stock market started? Between 1861 to 1865, American Civil War took place, which resulted in an acute global shortage of cotton. All the Lancashire mills had to turn to other sources, including India, as cotton was exported from India in very large quantities. Its price soared Surat cotton. For example, it went from a price of 3 pence per pound to 20 pence per pound. That's more than 6 times. Hence, between 1861 and 1865, export of cotton resulting in an unusual influx fell in the form of bullion, amounting to 850 million rupees, much of which landed in the beaconing shores of Bombay. Naturally, this brought in massive investment opportunities. Such opportunities sprang up spontaneously and brought with them a new generation of entrepreneurship. Being in the right place at the right time played their important role. Premchand Roychand, infamously known as Cotton King, who by virtue of being the first Indian broker to read and write in English, found himself suited to lead the equity markets in Mumbai. He then floated or helped float several companies which sought equity investment. With increasing investment, there was an increase in activity and the number of brokers increased to between 200 to 250. When things cooled down at the end of American Civil War, the organization build-up of the BSE started at first. An informal association was created in 1887. The brokers formalized the arrangement through an indenture, spelling out articles of Association of the Native Share and Stock Brokers Association 1875. They first started trading under a banyan tree, where they would allow people to buy and sell shares of companies. The Stock Exchange Mumbai was later renamed in the year 2002 to Bombay Stock Exchange. I hope you liked this video. If you did, please hit the like button and comment down below if you think if there's any scope of improvement. And also, please share this video. Till then, bye bye. This is Yashraj Bias signing off.